Welcome back. I'm Pratap here. Today is 7th March 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. This is a very important video. In this video, you are going to experience examples related to aggressive trades, bull trap, and you will also look into some special scenarios related to when a zone can be violated, and also one special chart that surprised me, that is ICICI Prudential, that we will discuss once we get into that chart. Even before that, if this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our YouTube channel NeoStock. Here, go to the home page, scroll down to the playlist Supply Demand Zone Price Action course. Click on this playlist, and here all the training lessons are available. I have also provided the link to this playlist in this YouTube video description. You click the link, you will get into this page, and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel. It will be useful to you. Each time when we release a new video, we will provide an update in the channel. Now let's get into analysis discussion. Yesterday we identified 1, 2, 3, 4, 5, 6, 7, 8 high liquidity zones from daily time frame and 75 minutes time frame. And out of these 8, 3 stocks we got the trades, and around 2 stocks are violated, and we identified well before those zones are going to be violated. Those scenarios we will discuss. And there is one more trade we got in ICICI Prudential during the last 5 minutes. Of course, during the last 5 minutes or 10 minutes, we don't consider them as trades. But some interesting observation we will see in this ICICI Prudential, which actually surprised me. That we will discuss. First, let us look into all the three trades that got success today. The first one is ADANIPORTS. It is a 75 minutes high liquidity zone. So let us get into the 75 minutes time frame. So here we have a base drop. This is the 75 minute zone suggested by our software. And this 75 minutes we fine tune to 15 minutes. Within this 15 minutes, we have a small leg candle. Consider leg in, base and drop. This is a 15 minute zone. Then what is this zone? This is a 5 minute zone. Then where is 15 minute zone? How can we fine tune 5 minutes without 15 minute zone? This 5 minutes should be inside the 15 minutes. But I have drawn outside. Why? Because there is a special concept which I already explained earlier. In case if you did not listen earlier concepts, this is going to be a good learning for you. We will discuss about this. And look into this 15 minutes. Inside 15 minutes, I didn't find any 5 minute zone. That means this 15 minute zone will be violated once prices enters into this. So let's go to the 5 minutes and see what is happening inside this 15 minutes and how we have drawn this 5 minutes. What is the reason for this? That we will discuss. Now I am changing the time frame to 5 minutes. Look inside this 15 minutes. We have a leg candle, medium size leg candle, and we have a drop candle. Are there any base candles inside this? No. There are no base candles. When there are no base candles, it is only a pivot. It is not a zone. Pivots will be easily violated many times. When this zone will work, if institutions decide to create again a new zone inside this, the 5 minute zone, after that during the retracement we can plan the trade. Otherwise this zone will be violated. But here we have drawn another zone, drop, base, drop. This is a 5-minute zone, but this is not a fine-tuned 5-minute zone. What is fine-tuned 5-minute zone? Inside 75 minutes, a 15-minute zone should be there. Inside that 15-minute zone, a 5-minute zone should be there. That is called fine-tuned 5-minute zone. But this is directly inside the 75 minutes by bypassing the 15 minutes. It is there inside 75 minutes high liquidity, I will agree that. But these zones, success rate will be very low. Many times these kind of zones will be violated. But there are some special scenarios, these zones will work. And we have to identify those special scenarios. And these kind of zones we are calling, if you are planning trade in these kind of zones, that is bypassing its higher time frame zone. 5 minutes higher time frame is 15 minutes. You bypass the 15 minutes, directly taking trade in 5 minutes. That is called aggressive trade. Aggressive trade should be supported by some price action clues. Otherwise, you cannot take aggressive trades. That is what I explained earlier. So, what kind of price action clue it is having? It is having a price action clue, rejections before this zone. See here, prices came very close and there is a rejection. Now you may ask a question, there is a enough distance. See, at least they are very close, not this much distance should be there. Actually we have drawn type 2 proximal. You draw the type 1. This is going to be your 5-minute zone. See here, they came very close to this zone prices. But we take entry inside the high liquidity. That is the reason why what we did, we just going for type 2 proximal. Now once prices touch this 75-minute zone, we will take the entry. Because this entire 5 minutes is there, the fine tune, the proximal to 5-minute zone is there inside the 75-minute zone. So exactly when prices are entering into this 75 minutes high liquidity, we will take a trade, and this is going to be the 5-minute zone. Distal line is going to be our stop loss. See, today we got the entry. At what time? At 1 o'clock 5 minutes we got this entry. Or maybe at 1 o'clock we got the entry. If you miss even 1 o'clock 5 minutes, 1 o'clock 10 minutes, almost 15 minutes you got the entry within this zone. So prices came, went little up and finally reached the target at nearly at 2 o'clock, 40 minutes candle. So this is a 15 minutes target. Let me go to the 15 minutes. You have a rally, base rally, and it reached the target. And this is the way ADANIPORTS has given 8,520 rupees profit, which is 3.3% ROA. Based on one future, the reason is this is around 2,75,000 plus is there around this cost of one futures. So that is the reason why your ROA is reduced, return on the investment. Compare it to our average 6.1% ROA. See, during intraday 3.3 is a very excellent return. But compare it to our average ROA, it is reduced. And moreover, remember, this trade is after 1 o'clock. See, this is look into the comment section. This is an aggressive trade at 5 minutes supply zone. Inside 75 minutes. The price action clue is rejection. Aggressive trades always you have to take only based on the price action clues. Otherwise you should not take aggressive trades. Aggressive trade means you bypass its higher time frame zone and you draw the zone inside the high liquidity zone. High liquidity is 75. But you bypass the 15-minute zone and directly drawn the 5-minute zone. Such kind of trades are called aggressive trades. Those trades you can accept only when there is a strong price action clues earlier. Otherwise, you should not go for aggressive trades. Always remember. There is another option. If this zone is a high liquidity zone, this 5-minute zone is a high liquidity zone, there is no earlier price action clue. Directly you can take. If any high liquidity zone, lower time frame high liquidity zone, inside higher time frame high liquidity zone, you can directly take a trade in the lower time frame high liquidity zone. Generally, if 5 minutes high liquidity zone is there outside the higher time frame high liquidity zone, mostly we don't prefer them. We can take a trade, it will work. But we can't guarantee 80% success rate. Because our high liquidity zone, 75 minutes time frame, daily time frame, based on that we defined a strategy. I named it as a high liquidity zone trading strategy. The high liquidity zone trading strategy I built is by using daily time frame and 75 minutes time frame high liquidity zones. And remaining time frames I did not define this strategy because this strategy is working very well for daily time frame and 75 minutes time frame high liquidity zones. For that I defined a strategy based on fine tuning the zone or aggressive trades based on price action close. Or even you can take aggressive trade based on a high liquidity zone also. 5-minute high liquidity zone inside 75 minutes or 5 minutes high liquidity zone inside daily high liquidity zone. I repeat again, 5 minutes high liquidity zone inside 75 minutes high liquidity zone or 5 minutes high liquidity zone inside daily high liquidity zone. You can directly take aggressive trades. They work very well. But if that 5 minutes high liquidity zone is outside the 75 minutes high liquidity or daily high liquidity, we can't give guarantee. They will work, but we can't give guarantee. Guarantee for getting 80% success rate. Because so far we have experienced our high liquidity zones are having more than 80%. From last September till the date, we have 88.5% success rate. If you look into the Excel sheet I shared in our Telegram channel, you will understand. We got around 88.5% success rate we got. So it's much better than the 80% success rate what I am expecting from this algorithm, software algorithm. So if your high liquidity 5 minutes, 15 minutes high liquidity zones are there outside the 75 minutes or daily high liquidity zone, they will work, but I can't give you that 80% success rate for those trades. Maybe they may get 70% or 65% or maybe 75%. They may vary. But 80% is the ultimate target I have given, I have set, which I am able to achieve with the help of daily high liquidity zones and 75 minutes high liquidity zone based on the strategy, high liquidity zone trade setup strategy. So all these days we are using that strategy only. Okay, hope you got clarity how we can plan aggressive trades inside the daily or 75 minutes time frame. This is the one I discussed earlier, maybe somewhere around some 1.5 months or 2 months back session I have given, but now many new people are also learning these concepts, so it might be useful to you. So this is about Adani. Next, DLF. DLF is also an aggressive trade, but this time you will see a different setup. First, let us move to 75 minutes because DLF is a 75 minutes high liquidity supply zone. Okay. Here we have a drop, we have a base candle, we have a drop candle. And today we got a trade in this zone. How we fine tune? So let me go to 15 minutes time frame. Here you identified a drop, base, again a drop, follow through candles. Here we have a 5 minutes high liquidity zone. Actually this is not really a base candle, maybe a little bigger than medium size candle, little bigger, but okay. Anyhow, I'm fine tuning this zone at a type 2 proximal line for 15 minutes time frame. So I have drawn this zone. because sometimes we compromise and we draw the zones. If you are an experienced person, you will understand where to compromise and where you should not compromise. You will get that clarity. So here, that's why I have written, even though this you should not consider, this is a ERC candle, a little bigger than medium size candle, but still I considered, because I am drawing the zone, only type 2 proximal. So here, what is my goal? In this area, probably 5 minutes price structure is good. You may find a real order flow in this area. That is the reason. Because we are not taking trade in 15 minutes. We are taking trade in 5 minutes. Within this area, if you identify, that could be a good order flow. But here, between these two zones, there is no 15-minute zone. Still, I have drawn the 5-minute zone. Why? Let me tell you. First, let me change the time frame to 5 minutes. See, inside this 15 minutes area, we identified an excellent zone. Rally, base, drop. And then a follow-through candle. A very good structure. Here again you have a drop candle, 2 base candles, and again a drop candle. Excellent drop. But price action clue, is there any price action clue rejection before this zone? No. See, the distance is very huge. We can't consider. Even if you draw like this, wick to wick, still the distance is not very close. A little far. Maybe if you would have come up to this level, let me draw. If prices would have come up to this level, I would have considered, after that prices go down, I would have considered this is a rejection. I would have given a lot of importance to this zone. So I cannot give importance to this zone based on the price action clue rejection, because the distance is far. Now let me draw wick to wick, so that exactly within zone it will be there. I mean, not wick to wick, the lowest body. Here supply zone, it is the lowest body. Okay. So anyway, price action clue is not supported. Still, how can we plan the trade? The reason is it is a high liquidity zone. Even this is also, even if it is normal zone also, no problem for us. Because this is a fine-tuned 5 minutes zone. This is a fine-tuned 5 minute zone. What is fine-tuned? 5 minutes is inside 15-minute zone. 15 minutes is inside the 75-minute zone. So even if it is normal fine-tuned zone, we can take a trade here. But this is normal zone. This is not a normal zone. This is a 5 minutes high liquidity zone. Even this is a 5 minutes high liquidity zone. How can we say this is a 5 minutes high liquidity zone? See, 5 minutes high liquidity zone, we cannot identify manually. Manually, at least you can guess. How you can guess? If there are multiple tests earlier. This is before today's trading, this is the price. This is yesterday's closing price. Whatever you are seeing, the last candle in this chart, this is yesterday's chart. And if you look into this 5 minutes, if at least 1, 2, 3, 4 multiple times if price is entered in this zone and coming down, at least we can assume this could be a high liquidity zone. Or new zones are keep on creating inside, at least we can assume maybe this could be a high liquidity zone. At least 80 to 90% level we can predict this could be a high liquidity zone. But this is a fresh zone. So we don't have any clues to guess this could be a high liquidity zone. It is a fresh zone. So only NeoStock software only can identify, because that is only identifying these high liquidity zones. So in our NeoStock software, we have a special feature, supply demand zone chain. Actually, I took the help of that. So let me show you. Let's go to NeoStock software in supply demand zone. Here see this third menu item, top down analysis report. Here I am entering DLF stock name. And I am changing the time frame to 5 minutes. I am changing the time frame to 5 minutes. Let me generate the chain, supply demand zone chain. It will take few seconds time to generate. Maybe 6 to 7 or more, a little more. It's a costliest operation. Okay, now it generated supply demand zone chain. See, we have the immediately available supply zone. It is already having 5 supply zones. The immediately available 5-minute supply zone is, see here the date, the leg-in date, 6th March at 9:35 after the 2 base candles. See here, this is 6th March 9:35 candle after the 2 base candle and a drop candle. So our software identified this zone as a high liquidity zone, and this high liquidity zone is inside 75 minutes high liquidity zone. If that is the case, you can take an aggressive trade here. A high liquidity zone inside a high liquidity zone is a powerful concept. But it is not inside the 15-minute zone, so we are considering this as an aggressive trade, aggressive high liquidity zone, 5 minutes high liquidity zone trade. So this is another price action clue, because it is having the capacity to give multiple trades within this zone. See the rejection, prices went, and see the rejection, and how then prices came down. In next 20 minutes, the trade is finished. When we got the trade at 9:15 candle, it is not exactly 9:15 candle. If you go to 1 minute time frame, it is at 9:16 candle. 9:15 prices went. This is the 9:15 candle, the green color one. The next red color candle is a 9:16. So between these 2 minutes, you got a trade. Because I have seen some people will avoid at 9:15. Even if maybe next candle you would have got the trade. And when your trade is finished, at 9:22 candle you reached the target. Sorry, 9:32 candle. In 9:32 candle it reached the target. So in 16 minutes you finished your trade. Just 16 minutes. So in 16 minutes you got a profit. How much profit you got? In DLF, 11,137 rupees profit, which is 3.7% ROI, return on the investment. Why not 6.1%? Because the futures lot cost is high here. One futures cost of the one futures lot is around 3 lakhs. 3 lakhs 1,000 is there something. So we can say around 3 lakhs. So that is the reason why your ROI is reduced, but your profit is increased. But this profit is for 3 lakhs investment. That's why ROI, return on the investment, is reduced. But whatever it is, your trade is finished in just 16 minutes. In 16 minutes, you got 11,000 rupees profit. Excellent. You would have got 2 trades today. One is a DLF trade. It finished in the first 16 minutes of your trading session. But next again you would have taken this ADANIPORTS trade at around at 1 o'clock. This is at 1 o'clock. Maybe in between you would have got this ESCORTS also. Let us look into the next one, ESCORTS. This is based on the bull trap, and also we know ESCORTS zone will be violated. So let's get into ESCORTS. This is a 75-minute zone. First let me show you the 75-minute zone. So I'm changing the time frame to 75 minutes. I'm selecting the stock ESCORT. So this is a stock 75-minute zone, drop, base, drop. Above there is a 5-minute bull trap is there. Institutions excellently they set this trap. And also they ensured this zone will be violated because they didn't create any order flows. We know if there are no order flows, we know there won't be any order flows. How we know? By fine-tuning the zone up to 5 minutes, and we check the quality of the zones. That way we will identify. So here when I get into 15 minutes, see here I didn't draw even 15 minutes zone inside this. The reason is 15 minutes price structure itself is not good. So I'm going to the 15 minutes time frame. See the price structure here. All these are all base candles. See the base candles. Lot of consolidation activity here. Base candle 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Even if you want to consider this as a ERC candle at 15 minutes level, let us assume you are considering this is a little bigger than medium size. And if you consider this is ERC, next one is also ERC candle, next one is also ERC candle. Finally, drop candle. No base candles. So that is the reason why we know this zone will be easily violated. But within this area, some 5-minute zone is there which holded the price for some time. It might have given you 5-minute targets, but we don't plan like that. See here, there is a 5-minute zone drop, or maybe ERC base candle drop. You have a leg-in base candle. Here some kind of 5-minute targets it achieved for some time. So maybe institutions kept some order flow here. That's why it has given first test and second test. A small profits it would have given. Intraday traders who trade based on 5 minutes zones, not high liquidity zone point of view. Our target is 15 minutes targets. And most of the times we get 6.1. Few scenarios we see less than that. That is what happened today. Today when we took aggressive trades, they reached 15 minutes target, but ROI is a little less than what we are expecting. But see, after that the zone is easily violated. Before entering, maybe there could be strong order flow. It has given a small push. But you see here, the moment how price reached into this, see the push, there is a strong real order flow. And then pushed the price till the next 15 minutes demand zone. Even it went beyond that. But it reached our first 15 minutes target. Let me show you our 15 minutes target. We have a leg-in base, a rally candle, follow-through candle, just came down and then moved up. And now picked up the orders at 1 o'clock 15 minutes candle. It reached 1 o'clock 15 minutes candle. So you can't take this trade or Adani trade simultaneously. Adani, at what time it has given the trade? Let us look into that. At 1 o'clock candle it has given the trade, Adani. Those who felt Adani trade, those who did not take, because the reason why you would not have taken Adani trade, probably you don't like to trade on aggressive trades, probably in case those people would have evaded. But otherwise, if you would have taken Adani trade, you would not have taken this ESCORTS. But you are having good capital, very good capital. Now you distributed your capital to both the trades, you would have taken both the trades. Some portion of your capital is in Adani and some portion of the capital in this bear trap, ESCORTS. So anyway, it reached the target. Let us go to the 5 minutes time frame. Within 10 minutes our trade is finished. At 13.25 candle. At 13.25 candle, you got the target. At 13.30 candle, it reached the target. In just 10 minutes, you finished your trade. Here you may ask a question. We would have got more profit if you would have gone for trailing stop loss. But remember, trailing stop loss rules I clearly explained to you in some of the earlier videos. What is the rule I explained? Let me tell you once again, in case if anybody missed, this is going to be a good learning for you. See, I told you, if the price is near, if 15 minutes, even 5 minutes candles are not having clarity, I told you get into 1 minute's time frame. So here let us shift to 1 minute's time frame. See, 1 minute you have drop, base, drop. You have a zone is there. If this zone is violated, then you will exit from your trade, or otherwise you will further continue. Probably you would have captured your move up to this here, somewhere till the bottom. You would have captured. Here it reached 75 minutes of demand zone. definitely you would have exited here, 75 minutes demand zone. Because when 75 minutes demand zone is there, that is the exit point. You can't go with further trailing stop loss. It actually reached 75 minutes demand zone, and then this pushes from 75 minutes demand zone. You would have exited somewhere here. You would have got an extraordinary profit. But what did I tell you? Trailing stop loss, you prefer if this supply is, this 1 minute supply is near to the 15 minutes target zone. Just imagine, prices reversed from here, and you want to go for trailing stop loss. You have drawn a supply zone like this. Now you would have exited. How much profit you would have got? Very small profit. Let me draw the info line. You will get clarity. See here, you would have got 13.90. That means close to 14 rupees profit you would have got. Close to 14 rupees. And if you would have exited as per our 15 minutes target, how much profit you got for each share? Let us draw the info line. You got 31 rupees profit. Here you got only 14 rupees profit, and here you got 31 rupees profit. More than half of the profit you lost. So you don't take such kind of risk, right? Maybe at least, maybe here, maybe if not 31 rupees profit, at least you would have expected a 20 rupees profit. Somewhere here, let us assume the zone is there. Somewhere here, just assuming, this is a hypothetical scenario. Assume this could be your profit. A little here. Let us assume this is your exit point. Assume there is a supply zone here. And if this is violated, at least you would have got around 24 rupees profit or 22 rupees profit. Then you would have taken a risk. But compromising more than 50% profit and going for trailing stop loss, I don't think we will take that kind of risk. Maybe because this price action happened after your trade, now you might be feeling I would have taken this trailing stop loss. I would have got double the profit. Definitely would have got double the profit if you would have exited somewhere here. But you will get that feeling after completing the trade only. But during the trade, what could be your psychology? That is important. During your trade, you never feel like to go for trailing stop loss when prices entered here. Because your 1 minute supply zone is far away from your target demand zone. Your 15 minutes demand zone is your target. It is far away. You would have lost more than 50% of your profit. Who wants to lose that much profit? When you never know, when prices entered here, you never know whether it will further go down. After that this price action happened, now you know. Definitely you would have exited in this 15 minutes itself. So that is the reason why logically it is wrong thinking that I would have gone for trailing stop loss. That is not practical. So you would have not selected this 1 minute zone to go for the trailing stop loss. Definitely in this 15 minutes you would have exited. Even I will also do the same. I can't lose the 50% profit. Suppose if prices reversed and went, why should I lose that much profit? Okay, if it is in our favor, we never know how much further it will go down. Today it happened, it went further, at least another half of the profit you got here. Compare it to this. Definitely you got double the profit of what you actually got from this 15 minute zone, because it reached 75 minute zone here, somewhere here. 75 minutes demand zone it reached. Let me show you in the 75 minute zone. See here you have a drop base rally. See, it reached the 75 minutes demand zone. So definitely you would have got the maximum profit today. You would have exited here. But your trailing stop loss is not supporting you to take this decision. So here you would have exited. You would have got double profit. But this 1 minute trailing stop is not supporting because it is somewhere in the middle of your entry zone, that is your bull trap zone, and your target zone, that is 15 minutes target zone. It is exactly in the middle. You would have lost half of your profit. Who wants to lose half of the profit? If you want to take a risk, maybe 10% or maximum 20% profit, you can lose, and you hope for getting more profit. Your risk is only 20% of your total profit you achieved by the time prices reach to this 15-minute zone. But risking 50% of your profit and going for trailing stop loss, I don't think it is a practical scenario. If anybody think I went to trailing stop loss and I got this profit, that is not practical. Hope you got the clarity, right? So that's why we have to stick to this 15 minutes demand zone only. So let me delete this 1 minute zone. So let me go to 15 minute zone. Now see here, this is the profit you got. When you got the profit, in the next candle itself, 15 minutes candle, if you go to 5 minutes, at 15 minutes candle it reached. If you go to 1 minute, let us tell exactly when you got the trade. See, actually 3 candles it was within this zone. You would have got your trade in either 1 o'clock 26 minutes or 27 minutes or 28 minutes candle. One of these candles definitely would have taken a trade. It has given enough time to take your trade. And then your trade is finished in 1 o'clock 33 minutes candle. That means within 8 minutes your trade is completed. And how much profit you got within 8 minutes? You got 8,525 rupees profit. And which is 5.8% ROI. See here, in both ADANIPORTS and ESCORTS, the profit amount is almost same. But here Adani you got only 3.3%. Here you got 5.8%. The reason is ESCORTS futures cost is only around 1,30,000, close to that. So those who felt ADANIPORTS margin cost is very high, definitely they would have gone for this trade. If they avoided, anybody would have avoided ADANIPORTS, they would have gone for this. But whatever it is, the profit margin, overall profit margin is the same. Only your investment margin cost is a difference. Okay, these are the 3 successful trades we have seen today based on the high liquidity zones. Now let us look into the other trades. There is one more trade, but we don't take during intraday because the last 5 minutes only we got. Last 5 minutes or 15 minutes you got. Let me show you. Because an interesting lesson is also there in ICICI Prudential. A surprising lesson. Even it surprised me. This is a 75 minutes or a daily zone. Let me check. Yeah, this is a daily zone. We have a rally, 2 base candles and a drop candle. This is a daily high liquidity supply zone. And in this daily high liquidity supply zone, I identified 2 75 minutes zones. Inside 2 75 minute zones. Let us look into those 75 minute zones. See, one point you have to understand, whatever I am doing, same thing you can also do because you already learned how to draw the zones. See, the first one, we have a rally candle, 3 base candles and a drop candle with a gap. That means hidden body you will be adding. This is a drop candle. That way we have drawn one 75 minute zone, and another 75 minute zone we have drawn. We have a drop candle. This is a leg in, and we have 2 base candles and a leg out follow through candle. That way you can consider are 3 base candles and a leg out candle from this zone. But this is not a great leg out, but still you have a follow through candle is there next. Because again there is a hidden body is there. You can add hidden gap is there, hidden body you can add. That way you get follow through. Either way you can draw this zone. So basically we identified two zones here, 75-minute zones. And inside this 75, you should identify 15-minute zones. So in both 75-minute zones, we identified 15-minute zones. Look into the top one. Here you have a leg-in candle, ERC candle, failed ERC candle leg-in. You have a base candle here, and then you have a drop candle with hidden body. So this is one 15-minute zone inside first 75-minute zone. The next 75-minute zone, you have a drop, two base candles and a drop candle. This leg out is not very great, but okay. This is a little bigger than the average candle. A little bigger than the average candle. So drop, base, drop. This is a leg out. So compared to the small bases, this is a bigger one. Double the size compared to these base candles. So this we have a 15 minutes zone. Actually two 15-minute zones I identified. Drop, base, drop. There is one more rally, base, drop. Rally, base, drop. See here. Rally, base, drop. And drop, base, drop. But in this drop, base, drop, I did not identify any 5-minute zone because the price structure is not good inside this. I know this will be violated. And what about this? I identified a 5-minute zone. That is a very interesting lesson. That is the where you need to focus. First we will look into the bottom one. And here also we identified a 5-minute zone. After I show you this 5 minutes and this 5 minutes, then last we will get into the 5-minute zone inside. Why it is interesting, I will explain. Because why I am explaining this is maybe next time when prices enter, it could be a trade for you. Next time means our software should tell next time. At the time only you have to take a trade. Because I told you this is a valid zone. If tomorrow prices enter but our software is not listed, then it may not work. It may work or may not work. I can't give guarantee. Previously I remember one of our members, they took a trade like that, but that is not listed in our software. So you should not do that. So now let's go to 5 minutes time frame. Change the time frame to 5 minutes. Now let us go inside this 15 minutes. Total we have 3 15-minute zones. First we will look into the top one. So this is a ERC candle leg-in, base and a drop candle and again a follow-through candle. So here you have a 5-minute zone. Fine-tuned 5-minute zone. Why I am saying fine-tuned? This 5 minutes is inside 15. 15 is inside this 75. This 75 is entire inside this daily zone. So it is a fine-tuned area. Okay. And what about the bottom one? This is the 15-minute zone. See all these candles. Base candle 1, 2, 3, 4, 5, 6, 7. Maybe this could be a leg candle. All these base candles, medium size leg candle. See all these base candles are more than expected. If you want to draw a 5-minute zone, you have to draw from here to here. But we have more than, lot of consolidation took place. That means this zone will be violated easily. That is what we discussed. See what happened today. See this zone, this 15-minute zone is violated. Just like that violated. So these are the lessons for us. Because we learned when a zone will be violated. These are all the examples. What I mean to say, lesson you already learned. These are all the examples to understand when a zone will be violated. All these base candles are more than 6 base candles. So that we can consider it is a consolidation. No, their institutional orders are very weak or no orders. Anything will happen. Even if they are there, it could be weak. It will be violated. First of all, if you are violated, you should not draw the zones. Unnecessarily it is a big confusion to you. But why I am drawing is because I am teaching to you. So you are learning from here with these examples. Excuse me. So now I am deleting this. Okay, this is the one we have interest. But if you look into this, there is no proper structure here, right? Okay, maybe this is a medium size candle. This is also a medium, a little bigger than medium, or maybe medium, or both. You are not properly, you can't consider this is a zone. It's not clarity. Okay, here we have a lagging candle. It is clear. Base candle, base candle, base candle. This is a leg candle, not a medium size leg candle. This is also medium size. Sometimes what we do, we compromise and we draw the zones, but not really giving comfort. What you do, you just leave that zone, right? But don't do that. See whether any order flow is started before this. Okay, within this area, it should overlap with this area. That is zone confluence, right? A 5-minute zone and 15-minute zones overlapped. It need not start, order flow need not start from here. It can start even earlier also. So that is what I did. I went before I saw what is happening. Here new zones are creating. New zones means this is an indication. This is an indication that maybe this could be a high liquidity area. Because that's why multiple tests, again and again prices. That means a lot of order flow is picked up from here. And finally I saw a zone here. Here the real zone started. See here we have a lagging candle. Failed ERC candle. It is a lagging candle. We have two base candles and we have a leg out, excellent leg out here. So this is the way you have drawn. See here one interesting observation I want you to make. See what is the high of this zone. I am keeping my mouse here. Observe on the top here, open, high, low, close, trading view, when you can observe the prices. Now I am keeping the mouse. This is the high of this zone. What is the high of this zone? The high of this candle is 595 rupees. Remember this value. 595 rupees. Please remember this value. Why I am telling you? Remember, there is a reason for that. 595. The high of this zone, right? See, prices came, again moved up, and again picked up the orders from here and then came down. So, what is the high of this candle? High of this candle is 595. That means this is the distal line of this zone. Zone is not violated. The distal line is 595. So, it picked up the orders from the price 595 and came down. Next time again, it didn't go up to here. Before itself, institutions again created a new zone inside, pushed it down. But still this is part of this zone. This is a high liquidity zone. This is a 5 minutes high liquidity zone. Now came down. Now again see, in this instance, again prices went up. This is the last time when we drawn these zones, 5-minute zones. In that 5-minute zone, see the high of this zone. 594.95 paisa. That means it is again 595. If you neglect that 0.5 paisa, again 595. So that means at 595 or 594.95 paisa, that area within that 5 minutes 5 paisa are exactly 595. See the order flow. So I got a doubt. Is it a single order flow at 595 is making the difference? That means a huge order flow in this zone at 595 paisa, exactly at 595 paisa. Who knows, exactly at 595 paisa, institutions might have kept some 200 crores worth or 300 crores worth orders. Who knows? Why I am thinking like that? See here, this is 595. From there it came down. Again here in this candle, 595. From there it came down. And here also at 595 it came down. But just 5 paisa difference in this case. But remaining earlier 595, 595. And what is the next? Today. Next is today. See today what happened. This is the last 5 minutes of today's candle. See up to what level the prices went. See the high of this candle. Check here. See what is the high of this candle? 595. 595, see the push. I thought maybe it is a false order. That's why to check that, what I did, I went to 1 minute time frame. So it's not false. Prices moved here, moving. From here it went. See the huge candle. After that again next candle's continuation is there. See the rejection from here within 1 minute. This is at 595 at 3 o'clock 26 minutes today, before 4 minutes before closing the session. See the high of this candle, exactly 595. So that means exactly at 595, maybe some institution kept a huge order, maybe some 200 crores or 300 crores, who knows, I don't know. It is my wild guess. Otherwise, such a strong rejection and pushed the price. Because last 5 minutes, nobody will dare. It's not even last 5 minutes, last 4 minutes. Nobody will dare to trade during the intraday. Imagine if you would have traded, how much money you would have got from 595. But maybe your entry is at 593.75 paisa. So let me say approximately 594. Let me assume you have taken. Just rough calculation. Because I have not considered this as a trade. So that's why I didn't document in the Excel sheet. Just curiosity. 594. Okay, 593 point. How much here? 593.70 paisa. Minus, is there any 15 minutes zone here? Just, no. For 5 minutes. Maybe somewhere here. Let us assume. Because this is a drop-based rally, this should be your assume in the last minute you would have exited here. Now let me go to 1 minute. You will get clarity when you exited. In this candle, definitely you would have exited. So what is the exit here? For 5 minutes trade, the open of this candle, 582.40. 582.40. 11 rupees profit you would have got. 11.11 rupees 30 paisa. Just curiosity I am doing. This is not a trade. But I am just telling you the power of this zone. It's not even in the zone. Zone means it is in a range, right? A zone is an area, a price area. Actually, it is not exactly at 595. It is working. It is a price point. Instead of saying zone, we have to say it is a price point. The price point is 595 rupees, which is making the magic. It's not. It doesn't make the magic today. For the last 4 or 5 attempts, it's been doing. I think this is the 4th attempt, if I am not wrong. This is the 4th attempt. First attempt is at the zone creation. Second, it gave a trade exactly 595. Third, again, it gave a trade at 594, 95 paisa. Just 5 rupees difference. And today again 595. In all these attempts, 595 is working like a magic for this particular stock. ICICIPRULI Prudential. And 3 minutes, in just 3 minutes it gave 11 rupees 30 paisa profit. So what is the cost, futures cost? Let us check. Just curiosity, how it is working. So this is ICICI Prudential. Let me copy. In zero the margin calculator, I am entering the stock code, and this month is March, ICICI March future. 1500 is the quantity. and around 1,62,000 maybe, close to 1,62,000. Around 1,62,000 approximately. Because by the time prices went to the entry area, maybe slightly it would have increased. Slightly. See, 11.3 into 1500, you got 16,950 rupees profit in 3 minutes. You know what is the ROI? Into 100 divided by 1,62,000 approximately. 1,62,000. You got 10.5% ROI you got. 10.5% ROI. 16,950 rupees profit. That means close to 17,000 rupees in just 3 minutes. Of course, this is not a practical scenario, but I am just telling you. That's why it made me surprised. How that 595 rupees is working. Maybe somebody, I don't know, some fund manager or somebody put a huge order in that particular area. Just exactly at the distal line. Okay, this is one interesting observation you have to make. This is the first time I have seen exactly same price point is working like a magic. See, one time or two times we can see continuously. This is the fourth attempt. So, and another one is a Pidilite. Pidilite Industries is violated, and it is a daily or 75 minutes. Yeah, this is a daily zone, rally base drop, and this is from September 22. 16th September 22. The problem with this zone is you can't fine tune 5 minutes. Why we can't fine tune? Because 5 minutes data, your TradingView application is not showing you. 5 minutes data, it will show you only for last 1 year. So if that is the case, we cannot fine tune the zone. If the structure is not good, what will happen? The zone will be violated. But what I did, rally base drop identified. Anyway, we can identify the zone we have drawn. Up to 15 minutes data is available in TradingView. You can watch. So went to 75 minutes and fine tuned this area. How I fine tuned? Let me show you. We got two zones. Rally, base, drop candle. ERC candle having good body. Body is good. ERC candle more than 30% body is a good body, good candle. And after that follow through candles also there. So it's a valid 75 minute zone. This is again a rally base drop, another 75 minutes. Out of these two zones, we identified 3 15-minute zone. Inside the first 75, 2 15-minute zone. The next one 15-minute zone. How we fine tuned? Let me show you. So going to the 5 minutes time frame. This is a 15 minutes. This is the bottom one. We have a rally, 1, 2, 3, 4 base candles and a drop candle. This is one zone. And inside this 75, we have two zones. Drop, base, drop. Already it is tested 15-minute zone. And again here we have a rally candle, that is a leg candle, leg in. We have a base and a drop candle. Next one is also a drop candle, but picked up some orders from here. Okay, fine. This is what happened. Now the problem is we cannot identify the 5-minute zones. We don't have the data. Without the data, how can we say the structure of these zones are good? And moreover, prices were earlier went inside. That means if there is any 5-minute zone, orders would have been picked up. They might have been already tested. See here, this candle, if there is a 5 minutes, let us assume, this candle would have picked up the orders. Again, let us assume there is a 5 minutes. This candle would have picked up the orders. And what is the guarantee that there is a 5 minutes, but the zone would have been pierced or violated in this candle? In this candle, we don't know. We don't have clarity. That's why we have to look into the chart. Okay, but what I did, I have this, just now I shown you this supply demand zone now, chain. From this chain, I have generated the chain for this, and I identified a 5-minute zone exactly in this gap. Slightly it is overlapped, but that is not really a considerable overlap. But somewhere here, between these two 15-minute zone, there is a 5-minute zone is there. 5-minute zone should be inside these zones. If it overlapped, a little above or little below should be there. Not the entire zone should be outside or slight overlap with this. We cannot consider. Excuse me. But exactly within this gap there is a 5 minutes. Except that there are no zones inside as per the our supply demand zone chain. And moreover, supply demand zone is a very strict algorithm. It can't compromise and draw the zones. It is very strict. I made it very strict. Only human can compromise and draw the zone. If you want to compromise and draw the zones, at least the data should be visible to us. That is also not there. Because the software is also not shown any zone, I thought mostly this zone will be violated. At least the software should have given one zone inside this or inside this or inside this. Only one zone in between. We cannot consider that. See what happened today? Exactly within that gap area, that means 5-minute zone area, there was some struggle for some time, not very great, some time. If you look into 5 minutes, you will get clarity. Within this gap area, there is a 5-minute zone. I told you slightly overlapped. See here. After that, the 5 minutes pushed to the zone. That is not good enough. Now institutions easily violated. Maybe it has given some resistance for about 15 minutes time. See, the order flow came down. First, prices went, came down, again went, came down. That is, they are consuming the 5 minutes order flow within this area. Slightly, I told you, slightly overlapped. Let me show you, you will get clarity. Peditile Industries. I am generating the chain, 5-minute zone chain. See here we have a resistance supply zone, but that is before it is already violated, already tested for 7 times it is already tested this zone. And this is outside the high liquidity. See what is the high of this candle? 2848. This is the area. 2848 means before this zone. Maybe this is the area somewhere earlier it has given. So anyway, that 5-minute zone is before the zone, not inside. So that's why I just ignored it. Next one is a pierced zone, ignore it. And this is the only one valid supply zone. See the high of this zone? 2879.80 paisa. Let me draw horizontal line at that. This is the high of the 5-minute zone. Let me copy the value in the coordinates. See, this is the high of the zone, the distal line. This is the distal line of the 5-minute zone. Then what is the proximal line? Low of the zone. This is the zone low. 2874.17. Actually, it should be rounded value to paisa. Trading will automatically do that. So let me draw a blue color line here. See it rounded to 1.5. If not 1.5, 2.0, small difference. Okay, see here. Between these two area, sometime it struggled for about 20 minutes. But this is not good enough. You may say this is slightly overlapped with but that is not good enough, because the entire zone, at least it should be there. A small portion, if it comes, we can consider. So we can't give priority to this. That means that is the only 5 minutes area some order flow is there. Remaining areas, see, this 15 minutes easily violated. This 15 minutes is violated easily. Maybe some order flows is there, some push is there here, but violated. And here also, 5 minutes zone, it has given small, but that is not good enough to give a reward for us, because we look for 15 minutes reward. This could have been the reward. Even if you plan the trade there, you won't have RR. See, it already reached the 15 minutes target. See, the first candle itself reached the target. Prices went and reached the 15 minutes target. So you don't have RR to, even if you want to plan a trade. Sorry, not here. This is later. I'm sorry for my mistake. This is the RR, 15 minutes RR. But generally 5 minute zones, you plan only 5 minutes trades. Somewhere here you will be planning 5 minutes trades. And after that, see, this entire zone is easily violated. Even this zone also easily violated. And even if you want to plan any bull traps or bear traps, there are no more zones here. Even for planning traps also, because price went to all-time high. Now the price went to the all-time high. So this is the way this zone is, because I know this zone will be violated easily, because no 5 minute zones inside these zones. Slightly, the only thing is this is the supply zone slightly overlapped, but I never consider such kind of slight overlap zones. That is dangerous for our strategy. Because generally we take trade at the edge of that particular our fine-tuned 15 minutes area if it is overlapped. So between the distal line and this zone, very small gap, there are higher chances that stop loss will hit. So that's why we don't plan such kind of trades. The risk, the considerable risk should be there inside this zone. The risk should not be there outside the zone. So Pedialyte is one thing. Even because I have this tool, at least I thought maybe I can plan a trade. But still it was not possible. But anyway, you would not have planned any trade in this stock. But you need to identify the reasons why it is violated. The reason is no 5 minute zones inside these areas. The only one available 5 minute zone is within this gap between these 15 minute zones. If at all, if we want to plan, that will be like an aggressive trade. Unless we know proper reasons, we cannot plan aggressive trades. So this is about Pedialyte. And what are the other stocks? Metropolis. We didn't get a trade today. Metropolis. We have drop 1, 2, 3, 4 base candles and a drop. And if you go to 75 minutes time frame, here the zone is not at all good. See, earlier prices went very deep, almost they are about to violate this zone and then came down. Now they created a new zone here. Institution, they decided not to violate this zone. That's why they created a new zone. Rally, 3 base candles and a drop. This is the way we got a new 75 minute zone. Maybe they decided to create a new zone, that's why they didn't fully violate this zone. That's why this is an active high liquidity zone. Now we have a new high liquidity zone. Now inside 75 minutes, we fine tune to 15 minutes time frame. So we have a leg candle, drop candle, leg candle, 1, 2, 3, 4 base candles, and again a drop candle. See, the rejection just went down. Actually, they picked up the orders just before. See, small gap is there. If you go to 5 minutes, you will get clarity. That's why I'm feeling this is a strong order flow is here. Okay, now I went to 5 minutes and I fine tuned there. Excuse me. In the 5 minutes, you will get clarity. Rally, 1, 2, 3, 4, 5 base candles. This fifth base candle is on a special trading day. So that's why we can ignore this candle. Because this is a rally, the higher wick of this candle. And then we have a drop candle. See here, prices did not reach into this zone. The type 2 proximal entry level, prices did not took. Instead, there is a rejection before this. So it is indicating maybe something is holding. Some order flow is there inside. Maybe definitely next time prices went inside, it will give a good big push. But today prices did not enter into this zone, so we didn't get a trade. And ICICI Prudential we discussed, and the last, and two more are there. Britannia is a high liquidity daily supply zone. We have a drop, base and drop. And inside we identified a 75-minute zone. We have a leg candle, base candle and a drop candle. This is the way we identified 75-minute zone. Inside 75 minutes, identified a 15-minute zone. See here, we have a leg candle, we have a base candle and a drop candle. This is 15 minutes. Within this 15 minutes, 5 minutes, we have a leg candle, we have a base candle and a drop candle. This is the wick. So in the wick, this is the wick of the leg out. Because in the wick of the leg out, this candle is there, maybe strong order flow will be there. The wick of the leg out candles, generally we have strong order flows. Even earlier also I told you once this point. Remember this. But prices didn't enter, we didn't get a trade. And the last one is Burger Paints. This is also a daily zone but demand zone. We have a leg candle, 1, 2, 3, 4, 5 base candles and a rally, huge rally candle. See, this is a sluggish. If we completed our demand and supply zone, we discussed about a sluggish move. This is the sluggish move. So if a zone is having a sluggish move, that is a weak zone. The only advantage is it got a high liquidity zone. But at the same time, according to demand and supply zone point of view, it is a sluggish. If that is the case, this is not a good setup for swing traders. This is not a good setup for swing traders. For a high liquidity strategy, okay, it is okay, but swing traders it is not good because we do only swing intraday exit for high liquidity strategy. So be careful. It's not a good zone. And this is 75 minutes. Here we have a rally base. Rally is there. 75 minutes. Next 15 minutes. We have drop base, rally is there. Again rally base, rally is there. Again rally base, rally is there. Rally. 4 base candles and rally. These are all 15, sorry, these are all 5 minutes I'm showing, I'm sorry. First let me go to 15 minutes. We have two 15-minute zones, drop base rally and rally base rally. So within this 5 minutes, that is what we discussed earlier. But again we will discuss. We have identified three 5-minute zones, drop base rally, rally base rally, and again rally 4 base candles and rally. And moreover, these two are LOTL zones. They have overlapped with each other. These 5-minute zones are LOTL. And these 15-minute zones are LOTL. This is the 15 minutes and this is the entire thing is 15 minutes, both LOTL, 15 minutes. But here your risk is very, very important. LOTL sometimes what happens, your risk will increase. If risk is increasing, you have to take a deep entry, not the proximal 1 or proximal 2 entry. You have to take a deep entry. So you should be careful for the risk point of view. But prices didn't come into this area today. If tomorrow prices enter, you can't plan a trade because price closed inside the zone. Anyway, our software don't list this stock in our tomorrow's list. So these are the high liquidity zones we generated in our yesterday's report. Hope you have a good learning from this video because the many concepts we discussed in this video. Hope this information is useful to you. Let us all meet again in our next video. Thank you.